Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 10th. The news squawk is talking in my head. Hey, we've got CPI news today. Market expecting anywhere from spot 4 to spot 6% here, and that's basically all that matters. I think we are probably going to be right in line of spot 5, which is going to be interesting because there's so many people out there betting on really big inflation, and what are they going to do if they don't get it? What are they going to do if they don't get it? It's going to be interesting. So, coming over here to the charts, just to give a little look, okay? Big thing that I want to point out, we'll start with the treasuries first, is that we had a pretty big move up yesterday, but they are coming back. There was a 10-year auction yesterday, so to have that much demand, and the auction went really well, there was a lot, and I mean a lot of foreign demand. So we continue to be in a collateral strapped, like banks, they need more collateral, and apparently everybody else does too, because you got all these guys in foreign just begging to get this stuff. So they're not too concerned about the inflation right now, but we'll see what happens. E-mini not moving much. Oil, a little bit, but okay. Gold and silver, though, took a little bit of hit yesterday, and copper continues to be down. Dollar a little bit stronger since yesterday. So the big thing that I'm looking at here is normally I would be like, oh yeah, inflation could come in, it would be hot, and then we want to sell. I don't think that is likely, that it will be super hot. But if it does, we want to sell the treasuries because they are simply not prepared for it. But I think that what is more likely is that it's going to come in line, and then we want to buy the equities. That's my plan. Come in and buy the equities here because I think there's a lot of people going short because they think the specter of inflation is on the horizon. But the last two payroll reports were a little bit disappointing. The housing moratorium issue isn't over with, so I don't think that the housing cost is going to go up because they still just can't raise rents. I don't think that the vehicle inflation that we've been seeing, I think that we already saw the most of that. I haven't seen much of a change since last month in that, nor have I heard anything about food inflation. So I expect those to all be in line, and so the spot 5% estimate or so of what people are looking for, I think is really reasonable. Okay, and what else can I say here? We want to look at the report. If it's high, we should go and look into the report. If it's high and it's still just only coming from vehicle sales, that is very different than if it comes in and there's a really huge change in the cost of housing. Conversely, we could see everything in line, but maybe one thing went down and another thing went up. So we should probably look at the report as quickly as we can. Okay, so man, it's really hard to talk when the squawk is. I should have just taken my headphones off and been like, okay, let's turn on the text-to-speech. By the way, hi, Win. I will turn the robots on after the news. Good deal. Hey, Joseph, how are you? Oh, thank you very much. I try so hard. So luxury goods are pushing the numbers based on Louis Vuitton and other luxury brands. They did well. Yeah, right? Isn't that so weird? But you know what? Here's the thing that I think is so interesting is that it's not necessarily rich people that buy the luxury brands, right? So I think that Louis Vuitton has been doing well, perhaps because of all of the stimulus that everybody got. People had all of this extra money. They decided to go and buy luxury goods instead of saving it away. Isn't that funny? Okay, here we go. Can you feel the energy? Ten seconds. Okay, it's spot 6. I'm not going to touch. Okay, so I'm looking at the report now. Here we're getting the main numbers and stuff. Okay, used cars and trucks was 7 spot 3. Shelter was still in line, spot 4. Transportation, this is overdone. We didn't really get energy inflation. That's curious. I'm making like a really crazy bet here. Thank you. So ECB's resident Laguardia is saying stuff right now too. So. I'll pull the numbers up here for you guys again. I'm surprised that energy actually ended up being spot 0. See, food was still the same as last month. This one was less. It was less than last month, but the pressure is still coming primarily from used cars and trucks. And well, one that does stand out to me as apparel. But like we're not seeing the shelter, the change in shelter. In fact, it was spot 3. It was less than last month. Right. This you see spot 6 and you think, oh man, like inflation is here, like this is really bad. But actually, like we know the used cars and trucks issue is there. Everything else is still kind of like in line. So this is not up here as bad as the initial move is. I could not I could not come up with a better setup for us. Like the market just read that number and all of the retail traders just like immediately sold it and didn't actually look at the thing to see what was actually going on. Apparel people have begun to buy pants again. Yeah, apparently there has been a rise in the price of apparel. But like here's the thing is like people have been expecting these insane CPI numbers. Last time around, we did get an insane number, but it was because people just did not really factor in the estimates, rather, did not factor in how much the price of used cars had really changed. Okay. Is the market that efficient? Apparently not, because that's definitely something that we could have seen that we didn't, right? But now you come in and you look at this report and it's like spot 6, but it's like, it's not huge. It's only spot 1% above what the consensus estimate was in my book. And it's mostly still because you're getting a 3% rise in the price of used cars and trucks. So is it really bad? It's really not, but nobody thinks about that. How many people actually come in and look at the report and look at the crosstabs, right? I'm not listening to the ECB yet. I'm just listening to my news squawks and the Twitters because they're not really saying anything too important yet. I wouldn't be able to keep track of everything if I had her up to. Would you like me to turn her on, Kevin? Because if you guys need me to turn it on so that you can listen to both of us, that we can do that. So you see here, the E-mini took this huge plunge, and then we came right back. I think we should be good as long as Mrs. LaGuard doesn't say anything crazy. Good morning, AK. What do you mean by what do you listen to? Okay. There's a little bit of aggression there in the Treasury on the downside that kind of looked like maybe it was coming from the longer end. And we'll look at that 982 up into 11. U.S. Fed futures in thin volume is now fully pricing in a rate hike between April and May of 2023. That's about right. Oh yes, I forgot that we roll the equities here. I'll stick with this contract today because of the CPI, but look at that E-mini. There's still only 20 to 25% of the old one. Really? Well, that might change when we should double check that again, Kevin, when the equity market opens. Oh my God, are they gonna go and breach the high of the night? This could not be playing out better. Yeah, look at that. Look at that. Okay. I will take it off right there. Oh, maybe not. Cool. So I wanted to see the stop run and a little bit of distribution, so I took that one off. I want to be able to focus on my treasury in here, see if I can work out a little bit better of a position, because I didn't necessarily get the best prices. You don't think it will change today? Well, we should still look after the equity market opens and see what it is, even if it's lower. So we may be getting some inverse correlation between the treasuries and the equities here. Yeah, that's a really big difference for sure. Well, I seem to recall there being a similar problem last time around, though. Yeah. So are you listening to something in your headphones? I am listening to a news squawk in my headphones. Yes. They're asking for a ZB going down. Yeah. So I'm kind of looking at this one. Maybe I should have stuck to my plan. I just kind of reflexively took it in both of them, but my plan was, if it was kind of in line, to only take it in the equities. That one worked out. I kind of think that the treasuries are going to have to come back too, though. I listen to Financial Juice. I have the lifetime membership in Financial Juice. Yeah, there's an affiliate link in the video description. For Financial Juice. No, I don't also. I listen. The website is Financial Juice is what I listen to, and they have a guy that comes in and he reads out what the number is live. That's how I knew immediately that it was spot 5 or spot 6. And I heard spot 6 and I saw it react really strongly. I said, okay, wait, this is an overreaction. Let's wait. I wonder if they're selling because of something LaGuardia has said here. But I've been reading the comments. I don't see any reason for them to be selling off of what she's saying. Oh, you know what? I think it looks like my Ninja Trader is not updating. Yep, it's definitely not updating. Yeah, there you go. No. There's a different link now, Winston. It should be in. Did I not put it in the video description? Oh, I didn't. Let me update it. There's the new link. Updated. Yeah, and that's the CPI that I was showing you guys earlier. Yes. Well, there was some pretty strong pressure down there, but look at how it comes back up. Yep, that's the correct link. The one previously that we had wasn't tracking correctly. So now we got the new one. We can actually see how many people click. Okay, so this move back up seemed like really quick, and it was like, oh, maybe they're fighting back, but this actually appears to me to be a vacuum around 12. Yeah, they're gonna have to shove it a little bit harder than that to get away from it. You see a gap on the ZB. Not too concerned about it. So in the bonds, I think the thing here is still that I don't think that the CPI should really have too big of an effect. What we're still seeing is transitory inflation pressures. In fact, the fact that things like food and shelter are not increasing on the CPI report is actually like a little bit concerning to me. Like the Federal Reserve wants to see like 3% inflation, and you're not going to get there with just the cost of used cars, right? So, but I think that the thing in treasuries is still that this market just seems to be desperate for collateral. So I would be really skeptical that we get like a real like dislocation and fall through that area that Uzi is talking about, even though it's there. So like when you come back over here and look at the volume profile, so I don't have one set up to show like the overall thing, but you can definitely see between here and here there's like a big gap. This is where we've got to remember that there are some inefficiencies in the volume profile that we should keep in mind, right? Like a big one that I think is relevant to us in the futures is that they tend to have a lot of volume on the close, and so that close price tends to stick out even though it might not matter. I think in this case it's because there was just, they had the move and then they distributed around there. So certainly if we got back to like the 158 area, I would be like, oh yeah, let's buy that. But I think that you're going to get like a range extension lower, and then we're going to come back up into this area. Okay, so they're doing the press conference now. Maybe we should pull that up now.
More optimistic
There we go.
about the economic outlook than we were 3 months ago. I think that the latest signal that we are getting signal a strong rebound, which is starting with the second quarter.
I need to just
and
restart
hopefully
Ninja
will be
Trader. It's not.
amplified in the third quarter.
It died somehow.
I think we took that sort of moderate optimism from the fact that, number one, we are seeing that the vaccination rollout has accelerated significantly and is increasingly outpacing other advanced economies.
Did you see that? It crashed
rollout.
hard.
And second, we are seeing that containment measures are gradually lifted. That should lead to a vigorous bounce back in that sector which was most affected, which is the service sector. So when we look at the service PMI, for instance, it is clearly now in expansionary territory. It went up from just marginal 50 in April to now 55.2 in May. Equally, when we look at the sentiment that is regularly published by the Commission, we are also seeing a sharp increase in May, actually the largest increase that they had ever recorded. And we expect private consumption to rise sharply as the containment measures are gradually lifted. So that's good news from the services point of view, which was most affected. Now, when we look at the manufacturing sector, which has earlier on been robust, it continues to be robust. And when we look at the Euro PMI manufacturing, for instance, it has stabilized at very elevated level to be at 63.1% in May. But we also looked into those supply side bottlenecks that clearly have an impact in the short term on our inflation, particularly now, but for the short term outlook as well. And that will create some headwinds, certainly. So that's all on the positive front. But we also acknowledged and looked into those uncertainties that we have on the horizon, which has to do with the evolution of the pandemic and how we see, little nest of revival based on another kind of variant. We are also dependent on how fast the containment measures will be lifted, particularly for those countries that are most sensitive to the service industry. The activities that are most a factor of social non-distancing. And clearly, if those containment measures are lifted early on, the tourism season, for instance, or a lot of the transportation activities will pick up. But that's an uncertainty as we look forward. So it's, as a result of that, that our staff increased their projection for 21, 22, and kept it at the same level in 23. So it's been revised up. Then there's a
big old order right there in the 5-year.
After it has looked deeply into our projections and what we see in terms of macroeconomic situation, our job is then to look at the financing conditions on the one hand and the inflation outlook on the other hand, because we do conduct that joint assessment, which we decided back in December, that we confirmed again in March, and which is our monetary policy reaction.
Going to be like a 10K here? Look, there's a big spread going on right here.
We clearly see broadly stable financing conditions taking together the corporate and the household sector. And,
the E-mini jumping up there.
There is a little bit of an increase in the corporate sector, which is
clear, not always.
Countries.
Maybe time to do it again, though, huh?
Germany. And this is probably attributable to some, tactical approach taken by those banks in those particular countries.
When I closed it, I got a bunch of error messages, and then it shut down. So
commitments that they have to take
I think that some thread got disrupted, overall, and that's what caused it.
Those particular factors, we see a little bit of tightening, very, very moderate though, but there is a potential that what we observed on the market interest rates actually could pass through, or is at least passing through, to the financing conditions that are applicable to the corporate sector in particular.
Well, there was a lot of offer volume there, but it looks like it was just a big order and they got through it. Because they didn't have any trouble bidding at 14.5 that time.
1.31% interest rate, which has never been so low. So this is the first part of the joint assessment. I'm happy to take you through the second part, which is also critically important, which has to do with inflation, but maybe that's too long an answer.
No, go ahead.
Shall I?
I'll leave to it.
Well, you're getting a really long answer for a really good question then. So we do the joint assessment, as you know, and we look on the other side at inflation. And as I said in the introductory statement, we are seeing some short-term improvement of the
She's
inflation.
getting a lot better,
Our
isn't she?
assessment for 21 is 1.9%.
You don't
which
like
is
the way
clearly
this
more
lady
than what we
talks?
had, in our last assessment. But I think we need, and we did that throughout our discussions, we try to really dissect what
Look at
is
the E-mini go.
and what is the
Should have stayed in that one, huh?
of some of those factors. And I think that it's worth reminding ourselves.
Man,
where we were a year
wow.
ago.
Can you believe the E-mini
Compared
is
with
moving?
where
If
we are today,
only
because
somebody
that's-
could have
that's how inflation
predicted
is
this.
calculated year over year. And clearly, a year ago, a lot of activities went down. Prices were under downward pressure, clearly. And the down movement that we saw at the time has now and is being compensated by an upward movement that we see in many of those prices that went down. Clear example of that is the energy prices, where if you remember, the price of oil and all derivative products went way down and has now recovered, and we see what we call that base effect between 20 and 21. This is clearly the case for it. We will see more of it because there is another base effect that will be attributable to the German VAT. Back a year ago, July 1st, decline of VAT in Germany deliberately in order to support the economy and sustain demand. Well, this has now been reversed, and we will be seeing the base effect in the months to come.
ZB bounced right off
Which is probably
31.
a reason why inflation in some countries, Germany being one, will go north of our forecast.
That's crazy that it went right to your
But-
target and bounced off of it. Yeah.
And I mentioned earlier on the bottleneck issues.
I was so concerned about you were saying that there's like this whole gap in the profile, and I was like, it's not going to go down there. That I completely forgot about your
Our
targets.
euro area activities, roughly 60% services. And services is predominantly labor. And we need to really dig down into the labor cost, into the wages increases, into the collective bargaining agreements that are reached currently and will be reached hopefully in the future. And in that respect, we don't see much by way of service prices going up. If you look at the many of the service industries, prices are not moving much. And that is because wages have not increased.
I was entertaining the gap is an area to dance if the targets were busted still early though. Yeah, well, at the moment it's still, so we got to remember there was like some decent volume at 16. There was actually a lot of volume at 16, and I don't think that was, yeah. We were only there for a short moment. So this move that we're seeing in the treasuries here appears more of like the vacuum effect than it is a reversal right now. I believe that what is likely to happen is they'll either slingshot up through here, or they'll distribute a little bit and then push back up. Especially with the way that the E-mini is moving. Man, the E-mini is just gangbusters, right? It's like, we've held off on buying it all day and now it's just going to take off.
Some of the base effect that I have described for you will begin to fade and will not actually have much of an impact in 2023. But, and that's a but, and it's important, and we discussed it at length, there's something that is moving a bit, and that is core inflation, when you take out energy and food. And on that front, there is a slight movement upward, which has now been repeated for a couple of months.
A slight movement, folks.
That's the reason why our forecast for core inflation has gone up a bit to 1.1 in 21, 1.2 in 23, in 22, and 1.4 in 23. We are far away from our ultimate aim, close to but below 2%, not there. And we certainly are not where we would like to be once the pandemic is over. But we are seeing some movement there, and we will continue to monitor that carefully. For the moment, certainly, headline inflations, temporary, specific factors that I have just described.
That's what I was waiting for right there.
It is going to last through and will be included in a rise in inflation that we would see in our medium-term projection.
Lack of latent liquidity at 16.
So that I have, sorry if I was a bit long, but I have taken you through our deliberations throughout.
Thank you. And the next question goes to Alexander Weber of Bloomberg News. Alexander, please.
Good afternoon, President Lagarde.
Good afternoon.
So on the pace of the PEP, so the reference to the first quarter in the policy statement gives you a bit of flexibility. How much fluctuation in weekly buying should markets expect over the coming months, also considering that there's typically less liquidity in the summer? And the second question, if I may, so once the PEP comes to an end next year, inflation will be slowing down again, according to your forecast. At what point do you need to decide on whether to increase buying under the APP or take any other steps to boost inflation over the medium term? Thank you.
Well, thank you for your two questions. So that takes me to the decision, actually, that we made, which is to, as I said, steady hand. So we, based on the joint assessment that I have just described, what the Governing Council has decided, as I read in my introductory statement.
So I didn't pick up on this phrase when she had just said it, but breaking, so Financial Juice is saying, ECB's President Lagarde, we're still a long way from our ultimate inflation goal.
Continue to be conducted at a significantly higher pace than during the first months of 21. Significantly higher pace than during
I've got this picture of central bankers as superheroes with a great little jingle at the beginning, and
which clearly include seasonality. And we will do that with the very core attribute of PEP, which is flexibility. Flexibility across asset classes, flexibility across time, flexibility across geography, as you know well. So that's really what we will be doing. And this is done on the basis of, as I said, the quarterly joint assessment that is decided by the Governing Council. And then it's for the Executive Board to actually implement and deliver on the basis of this joint assessment and according to market conditions, including seasonality. On your second question, I'm afraid you'll be disappointed, because I might just very well refer to my Lisbon line. There's no point losing ourselves in conjecture. It's premature.
I think I'm understanding what you were saying earlier about I don't like the way this lady talks. Like, because the way that she is talking about this right now is like, I'm so smart and clever.
Annette, please.
Thank you very much, President Lagarde. I have one question on your comments that a sustained rise in...
I don't think that she understands finance people like...
The market is kind of
because I think we've all been in that situation where the person that really thinks that they're smart doesn't really know anything, and considering that there's already been a lot of contention about how much she actually knows, she is like rolling off facts and it's clear that she's like been in the role and that she understands what's going on a lot better now and can speak to it better. But I'm not hearing anything that's like a real insight. You know what I mean? Like when Janet Yellen would talk in the press conferences, she would teach you things about the way, particularly the Treasury market worked, that you wouldn't learn anywhere else, because she's just like one of the. She was big in academic circles and stuff. Like, she wrote some really important papers, and you talk about Powell. I think that there's somewhat of a similar sort of a thing. Whereas when I listen to Lagarde, I just hear a reiteration of the stuff that everybody else is already talking about,
Enormous amount of work that just landed on
That's the banking or Silverstone lawyers or economists. We need traders in these positions. Well, I don't think that you can put a trader in there. No. I think that you could have put Jamie Dimon. I think Jamie Dimon would have been a good addition.
And I hope that we'll be able to give the outcome of the
but these are economists. These are economists, and I think you need to understand economics at a much deeper level than I do, for instance.
Any kind of transition, exit, whatever you call it, has not been discussed.
I do, however, wish that the central bankers did take a little bit more of a trading approach to it. But when I say a bit more of a trading approach, what I mean is like, I wish that they were a little bit more skeptical of their own assessments. I think that they do that on purpose because they want to give the market confidence, and they're afraid that if they came out and they said, well, there's this and this and this, and that the market will just react to it. So maybe that's our fault. But, you know, like on this transitory inflation thing, the thing that I don't hear that I think would make the market much more comfortable is like, okay, what are the reasons that we might be wrong? You say that it's only transitory. I understand why you say it's only transitory. What does the non-transitory case look like? Why would it end up being not transitory?
Conditions for corporates, for households, for sovereigns.
Banking is only as complicated as we make it. The bank never runs out.
The whole range of financing conditions.
Well, they can. The bank can run out of money. That's the problem of law.
Various components, the likelihood of our projections, and we come to a monetary policy decision, which, you know, as I said,
it almost never matters, but it can run out of money.
Translation.
That's why they have all these rules about how much they can lend out.
Thank you. Next question goes to Balazs Korani of Reuters. Balazs, over to you, please.
Good afternoon, and thanks for taking my question. President Lagarde, did anybody at the meeting make the case for a phrase, a terminology different than significantly higher? Did they advocate some other option? And was the decision unanimous? The second question is about the underlying assumptions behind the projections. How did you factor in the Indian or Delta variant? Does your baseline
63% of issued shares were voted in GME's vote yesterday.
Second half of the year, or do you expect
oh, you know, we should check up on that.
What are the projections for restrictions on the economy?
The proposal that is made,
because they were getting hit pretty hard in the aftermarket,
which you find in the introductory statement, which is the proposal to conduct purchases at a significantly higher pace than during the first months of 2021. And there was no alternative wording, and there was unanimous support for the introductory statement, and there was broad agreement over what was being proposed. Now, on the baseline and whether or not we take into account alternative variants and evolution of the virus, we will publish later this afternoon our scenarios, because we do have the baseline, and we also have a scenario
286.
that is a mild scenario, and a scenario that is an aggravated.
It's a lot better than it was, but it's not pretty, is it? Good morning, Lucas.
That you referred to.
Were you around for the news?
Thank you. And the next question goes to Martin Arnold of the Financial Times. Martin, please.
Lagarde, can you hear me?
Yes, I can. Thank you.
Thank you for taking my question. I have two questions for you today. Given that your media
just having breakfast
inflation forecast for 2023.
Yep, I saw the micro treasury thing. I should have made a video about it yesterday so that you guys don't all come and spam me about it. You know what? Because I wasn't feeling so hot until I ate, and then I was like, okay, I'm gonna play Overwatch. I should have recorded a video. It didn't even cross my mind.
Any effect on
but I am pretty pumped. So I was planning on like holding off and making another go at the E-minis, but with micro treasuries, man.
Presumably,
I can just work with that.
Much lower inflation.
And there's so many different things that we can do with that too.
Many of those bottlenecks.
Like we can try and trade the basis between them, and we can trade the spreads without having to worry about the DVO1 changing on us. Like, I think it's a really good opportunity, and a lot that we can learn from too.
Has been revised upward for 21.
So I'm going on vacation next week. Just a reminder, I'm not going to be here Monday through Wednesday. I'm going to work. I think Bots is going to come in and run the stream again.
And I have discussed that quite a bit,
I'm going to be doing a lot of reading
on core inflation
and study.
So we are clearly seeing improvement, and that dates back to December, because our forecast for the core inflation outlook has been revised gradually.
And I should probably go back to doing a little bit of back testing too, huh?
Exercises. So I think that's certainly one of the reasons why.
But I still have to. Oh my gosh! Well, when this is done, we'll talk about this. I got 3 things I got to talk about. So remind me, okay? We got to talk about switching brokers. We've got to talk about
the balance of risks.
Candlestick patterns.
Was tilted to the downside in our last projection is now.
Those are the third one isn't done really. The third thing that irks me is the lack of housing.
Because you're right, we foresee inflation.
There's this massive people on TikTok that think that the reason that housing costs so much is because investors are snatching up all of the houses and that there's plenty of houses, but it's not. Like, we're not even making half the number of houses that we need to.
As referred to in various articles, actually, that some of those bottlenecks will gradually fade out, because it is a matter of the supply response.
But yes, I need to make a video, because I'll be able to explain a couple of the reasons why it will be beneficial
in the course of time,
beyond just the treasuries.
Additional work processes put in place, and possibly offer of products revisited, as we know is the case, for instance, in the automotive industry. So
by the way,
from our perspective, that
you know what we should do?
Bottlenecks will actually be overridden by the ingenuity of those who produce and those who revisit their supply chain.
Thank you. Eric Albert of Le Monde, the next question is for you. Eric, please.
Thank you very much. Good afternoon, Madame Lagarde. I'd like to come back a little bit on the significantly higher pace. You said it was supported unanimously. You didn't quite answer the question about was the case for a different pace made by any of the member? Could you tell me that? And the other thing, could you give us your views on...
Okay, so what is the DVO1?
Are you more
80.48?
That we see the beginning of the rebound than you might have been a few months ago?
On your first point, I said that there was unanimous support for the introductory statement. There was debate on the pace of purchase.
So something that's going to be interesting about these interest rate futures is that they're priced in 1/10 of a basis point. So the DVO1 of 1 basis point is basically 3 ticks in the 10-year Treasury.
Okay. So I'm very transparent and very clear. Introductory statement unanimously supported.
So if we divide that by 10, that means that there's basically 2/10 of a basis point for every
we are still concerned about the
tick in the Treasury. Does that make sense? So basically, the gist of it is that if this ticks up 1, the new micro future will tick up 2. Does that make sense? So you'll be able to watch the micro future, and you will kind of see a really strange correlation between the book here in the 10-year and the future and the new future. Does that make sense? It'll be like this whole situation where it's like, you know, they scroll back and forth across 16 a bunch of times.
New skill set. So
you should be able to make money off of those in the micros.
Critical financing element to actually transition into the post-pandemic period and help those that will be most affected by the scarring impact.
It's a little bit, 16.5 being a little bit light there now.
Klaus Reiner, please.
Good afternoon. Mrs. President, my first question relates to inflation. Some leading economists,
And I did not explain that very well, because so if the DV01 is 80, then you divide that by 10. So a tenth of a basis point is $8. That's half of what a regular 10-year Treasury future tick size is. So the gist of it is that the new 10-year interest rate future will be about 2 ticks for every 1 tick in the current ZN.
What do you think of these ideas? And my second question relates
So it will be a little bit more granular. I bet you there's still going to be massive size on it, though. Because if it's only like $1, if it's only $1, I don't know how many banks would be interested in trading that. That they're pricing it at $1 kind of makes me think that they wouldn't touch it. But even with the retail traders, I bet you that you could be, like 10 Ks on them.
And a few others. I think that their point has more to do with
Like it could be super crazy.
Stimulus that has been
because it's half the volatility is going to be like double the 10-year, but the size is going to be like 15 times the 10-year.
$1 trillion, and the fact that there
Well,
might be
I mean,
overheating as a result
if
of that,
the same amount of money was put into the interest rate future as it is
I think that
in the 10-year, it would be 15 times.
Economy situation and the euro area economy situation are
Okay.
very, very different story. The two economies are at a different point in the recovery cycle. They start from a completely different base. The fiscal stimulus that have been put in place, at least in end of 2020 and beginning of 2021, are of a different magnitude. And as a result, whatever is ultimately the characterization, the longevity of the price upward pressure that would occur in the United States, I think is completely different from anything that we will see in the euro area. Although, of course, there will be some spillover, as I think I've indicated at our last March conference, as a result of the Biden plan. But certainly of too small a magnitude to actually make a huge difference. But we will be, pandemic is also a factor of what happens domestically, but also what the spillovers from the
We have
global
something else
economies,
today, don't we?
will,
I didn't even look at what the
on
unemployment
economy, and
claims
we will
were.
be very attentive, and we will look
They were
into
in
that
line, though.
as we look carefully at the.
Oh yeah, we got 30-year bond
exchange
auction today.
as
Gotcha.
well. On your second point, I'm no longer familiar with the situation in El Salvador. I know that it's a country that is under IMF program. I think the issue of having a dual tender in a particular economy is a difficult one, and that certainly does not change our approach to crypto assets and to the regulations, supervision, and proper classification that they should be under in order to avoid misinformation and misleading representations.
You hate these routine speeches.
The next question goes to Andres Stumpf of Expansion. Andres, please.
I feel like that the press conferences could be really useful, but it really has turned into kind of a silly thing.
It should be tilted to the downside or to the upside.
Wait, why are we talking about misinformation?
As I said, all the key points that are in the introductory statement that I have read to you have been agreed and have been seen as acceptable by all members. We did debate. This is the beauty of us being together. We did debate whether it was right to actually move to this slight downside risk that we had.
Like the thing is, I remember early before this, I did trade before they had these press conferences. And I definitely remember situations where the market was like did not understand what the central bank's position was on something, you know, and there was like they really need to be able to communicate it better. They need to be able to like control the market's expectation better. But now that we have these press conferences, it turns into like they tell us things that we already know, and the media just looks stupid because these people, half of the people there, like don't know anything. It's just like, and it kind of ends up being a big nothing burger that just disrupts the markets for a long time, huh? So I totally get it.
Warn you in advance that this is not, you know, the final go. I think my colleague and board member,
like you get all sorts of random movement when the ECB is talking. So especially when the Federal Reserve is talking, trading while Jerome is talking is like very risky.
To inclusion and everything in between. So it's not as if, you know, the decision was final and made. Exploring all these matters will actually take a lot of effort, a lot of digging, and will bring together the whole euro system, because it obviously involves all the.
Should note that even though we're not even close to break even in the treasuries, the spreads are, in the knob spread in particular, is pretty close to break even from the news, relative to the news, that is.
Will be, do we explore further, or do we not spend much more resources on this project?
And the next question goes to Mark Boindermann of NRC Handelsblatt. Mark, please.
Yes, thank you. Can you hear me, President Lagarde?
Yes.
Yes, thank you very much. You just said that the decision on the pace of purchases was broadly agreed. Could you perhaps sketch out a little bit how that discussion went?
Do you want to go long, ES?
From the point of view of those who were not in the majority. So this.
I think you're a little late, don't you?
Secondly, if I may. U.S. inflation just came in at 5%, which is high.
Are you all up in that edge? I don't know. I don't know about that. I honestly.
Possibility that U.S. inflation will trickle through.
Ace is like yes.
Thank you.
Check this out, Ace. Look at this.
Thank you very much. You know,
like look at your chart.
The Governing Council conducted this joint assessment.
You look at your chart, and now look at the price that I got, 42.10. I bought it 42.10.
Then the decision was made to continue to purchase.
She should. Yeah, they usually try and end it around the time that the open happens, for sure.
And as I said, there was some debate.
42.30. Well, I got out at 42.26, which was actually a really good price. But then there was that really crazy 6-point run, little bit like 15 minutes later, that I missed out on. So
that introductory statement was supported.
Thank you. And the last question goes today to Tom Fairless of the Wall Street Journal.
No, I got out. I got out right. I show you.
Hi, President Lagarde.
Thank you
for taking the question.
See, I got in down on this, and then you see this little 5-minute spike right here.
This very aggressive monetary.
There's like this little spike. You saw the distribution. I got out. There was this further move up, but like that's okay.
Longer-term risks.
Made plenty.
And secondly, maybe on the
6:30, yeah.
Comparison, you
well, it was. I took it to be more precise at 6:31.46.
Thanks.
Concerning your first question, what we always do.
I'm gonna have to highlight that trade because I don't think you could get a better trade. Like,
and as a result of that, we have to.
I came out before. I said it looks like that the numbers are probably going to be close to in line. People are a little bit too triggered about the inflation right now, and it's the big number that we're getting right now is just because of the vehicle sales. So when it came out and they all reacted really hard to it, I was like, okay, let's just wait a second. Pulled up the report, looked at it, saw that it was, once again, it was just the vehicles, and that everything else was just kind of flat. And therefore, if you discount the vehicle sales, we're in line, if not below what we need to be. So that's when I decided, okay, as soon as I see a dislocation of some sort in the E-mini, I can take it long, and I did. And I did it
central bank not made the decisions
on the Sirius account
to make sure that we were not going to move and morph.
And I think that my profit was like 120.
So I think that by doing what we did, we made sure that
we just had it pulled up, didn't we? 123. I made 123.
And that any risks of poor monetary policy transmission would be avoided. And by the same token, we also enabled fiscal policies to be.
Now, I kind of didn't follow my plan because I also ended up taking a trade in the Treasury, which I don't know if that one was super great, but
in order to actually resist,
I worked it out anyways.
Very dramatic spin into a disastrous economic situation.
But anyways, the reason why I want to highlight it is because it's a perfect example of where if you understand the news, you can find significant edge over the market.
Economy where it stands and as it stands, I think is not in the cards, because, as I said, we are, in terms of inflation, we're starting from a different base. In terms of fiscal stimulus in 21, different story as well.
E-mini looks bullish on the open.
Point in the recovery cycle, not the same place yet. Although, clearly our vaccination rollout is accelerating and now clearly outpacing the vaccination
VIX is down
the United
5%.
States and other advanced economies are going through. So, of course, when you look at inflation, there are domestic factors, as I said, and we have to be attentive to the global situation, and how other economies, whether they are advanced, including the largest one, or whether they're emerging economies, how they are faring, and that as spillover effects, or that as impacts. But are we exactly in the same point in the cycle? No.
Thank you, President Lagarde. That brings us to the end of the press conference. Thank you very much for following us. The next regular press conference is scheduled for the 22nd of July. Up until then, we wish you all the best. Stay safe, and goodbye.
There we go. They were like, "Yeah, we gotta get this over with." Okay. $42.35. Oh yeah. Big old order still there. So here's the deal with brokers. So I've been investigating. I haven't heard back from NinjaTrader yet. I kind of emailed them late. But I was catching up with the Edge Clear guys, and apparently they've kind of abandoned the idea of edge pools. He was saying, like, if we really wanted to get something together and everything, they could probably cut us a deal. But I'm guessing that the pools weren't really doing a whole lot for them. It's really kind of unfortunate, like, I think, for the brokers, because everybody is basically rock bottom. Because of AMP, everybody's basically rock bottom on commissions. So if you want to do anything, you have to charge more commissions, and then that automatically prices you out. Like, most people just only care about the commission, right? And then so what kind of things can you do to attract people? Well, it's turning out that the only thing that really seems to move the needle is your platform. So you're getting a lot of brokers trying to associate themselves with a platform, and like they lock you into the platform. So for NinjaTrader, it's kind of hard to use NinjaTrader outside of NinjaTrader brokerage now. I don't necessarily see anything wrong with NinjaTrader. I should turn on my robot now, by the way. There's not really anything wrong with NinjaTrader. There's not anything wrong with NinjaTrader brokerage. I just don't like that you're not free. I want to be able to use NinjaTrader on EdgeClear or wherever it is. Aren't EdgeClear's margins high? Yes, they are. That doesn't bother me at all, though. Quite frankly, I think that the margins that some of these discount brokers give you, like AMP, is ridiculous. Like, they're giving you like $50, $70 margins on micro contracts. They shouldn't give you that much. You know, like I wouldn't be trading it unless I had like $100 per contract backing you, if not more than that, you know? It's like a huge firm that, yeah. Well, whenever I see a big order, like a really big order like that, Lucas, I wouldn't look at it as a sell signal, let's say. There's kind of like this period where it's like that some trader is trying to push it down, and then there's this level at which it becomes so big that it's like a hedge or something else that the market will just ignore it. Infinity margins are good. So how do you feel about having your funds into a broker that asks traders such a low margin to cover their side? It's right? I just don't. You know what? We went through the worst of it and they were fine. I mean, it sounded like AMP, things got a little bit scary at AMP, but they handled it. So the system in the futures works pretty good, and it's not really something for us to worry about. But anyways, so the gist of that was that the advantage for EdgeClear was going to be like edge pools, and that we like the broker. Without the edge pools, is it worth it compared to going over to NinjaTrader, being able to use my full license and being able to use my automated trading robots, assuming that Jay continues to do well. He's been doing well this week. I don't know why I'm feeling wishy-washy about it. I guess it's just because I like the EdgeClear guys so much, but the cost-benefit analysis, it seems clear to me that I should be going to NinjaTrader brokerage, yeah? So, but I still need to do some more research and talk. I'm still talking to both sides and stuff like that. I also found out that to do the Rhythmic, so like I could make my own platform that connects to Rhythmic and isn't using the Rhythmic API Plus, but it's still $100 a month. So I do think at some point we should try and make our own platform, but I've got to do better with promoting the stuff that we're already doing. And this brings me to thing number 2 that I want to talk about. So one of there is a developer that makes indicators that I'm quite fond of, the Lizard indicators. I'm sure you guys are familiar with them, right? So you go to Lizard indicators. I think you spend $150 and you get this just absolutely massive package of indicators, higher quality indicators than what comes with NinjaTrader. I haven't found like any one of them that really has a clear edge in backtesting, but they definitely backtest better than the indicators that come with NinjaTrader or any other platform that you got, right? Okay, so they've got a new thing. And it's candlestick patterns. And I'm like, well, I've kind of looked at candlesticks. We'll see what they got, right? Well, here's what the package is. It shows you the same candlestick patterns that the built-in NinjaTrader 8 candlestick package shows you, but, you know, like a more fancy chart, like it highlights it better for you and stuff. I was like, this is ridiculous. And they're charging $225 for it. Now there are some things that they've done. They've made it a little bit easier for you to like distribute it and backtest it. But like I've already backtested these patterns, and I tell you what, like they are not. Oh my gosh, I'm already sick of you. So when you do backtesting on candlesticks, you get some interesting things, because the thing with the candlestick is that they're isolated. They tend to be isolated enough events that even if you're looking at a 1 or 2 year period, you're not going to get a ton of samples. So it's really, really hard to see like the tails and that sort of a thing on candlestick trades, right? So what will happen is if you go and you run it on a year's worth of data, you're going to be like, wow, it seems like this particular pattern has really good outlays, or rather percentages that you could trade off of, right? But when you start trying to do it over a really long period of time, you realize that which candles work and which ones don't work changes from year to year. And that really the results that you were getting before were probably a result of just overfitting the data. So that's what I've learned about candlesticks. And here they come in and they make this indicator package. They're selling something that like I've already done before, frankly, for $225. Like, I'm sorry, man. I mean, I like the people that make that stuff, and I think that their $150 package is great. But whoever spends $225 on that indicator, you are dumb. You are really dumb, for real. Like, that is a total swindle. That is not worth $225 at all. It should be free, frankly. And so I went into the downloads channel, and I went and I posted this strategy that I made for candlesticks. So you go and you download this, you put it in your strategies folder. I couldn't make it into a zip file. There's some weirdness with it that prevents you from putting it in a zip file. But it should work when you just copy it in and compile your code. And this will allow you to run back tests on the candlestick pattern. And you can like go and you can select which one you want. And so you can optimize and say which one is the best, and run it all these different ways. Because it just like really rubbed me the wrong way. Like I couldn't believe that they were asking $225. And the thing that I get so like is so crazy to me is like I feel like I have some indicators that are pretty sophisticated and show you things that you can't get anywhere else, and are like really critical tools. Like, I think that my market depth tape is a really innovative and useful tool. I think that the dollar index is a great thing that I'm surprised isn't more common. And I'm only asking $5 a month for it. And then you get these other guys offering like a complete trash and making $225. And I bet you they have way better marketing and make a ton of money off of it. But it's just so frustrating. But I want to get to the point where we need to get 20 subscribers, and then maybe we could consider making our own platform. So any ideas that you have about how we can make our indicator package better or more attractive to people and get more people, I'm all ears. The more you charge, the better the indicator, right? Well, I really probably should. Lucas says I have to make that synthetic dollar index too. Yeah. I mean, that's the funny thing with the synthetic dollar index is that I wouldn't say that it's a simple indicator. Okay, so like it's not something that if you don't know anything about programming in NinjaTrader, you know, you can come in and look at other people's codes and hack something out. There's some nuance in it, in that you have to have multiple data series open, and how do you handle when you calculate it and stuff like that, right? But Lucas could definitely figure it out. Yeah. And so here again, why isn't this more common? I think it's probably because anybody else that's ever done it knew how valuable it was and wanted to keep it for themselves, I guess. And that's why I put it behind a paywall too. Because I didn't want everybody to have it. But yeah. Okay, it finally took me out at 20. Was that really what I wanted? I probably could have held out for a few more ticks, but yeah, you're saying I think $100 per month of data feed. Yep, that's exactly what I'm saying. So once we have 20 subscribers, then I can maybe justify the cost of $100 a month on the feed. But I don't know, man. So one of the things is that I never went in and I could still do a Ninja Trader. I could probably still ask them to do a webinar and we could go through the tools. I kind of didn't do that because I was like, well, we're kind of in beta testing phase. And I don't know. One of the things that I'm still a little weary about is like the subscription. It doesn't seem like that. It feels like that's too much friction, like that you have to email with the idea. Well, you would have to do that if you purchased regularly too. So I don't know. But some people, they're not so fond of the monthly fee. So maybe I do need to move over to a one-time, and I think that a fair one-time price would be $100. So we could go to $100. You could say I do $100, or you can do it for $5 a month. This is what I think I'm gonna do. But I just need to get better marketing. Like I made a YouTube video and everything, but like it's in like full detail. I think that some of the edges that we're providing are a little bit too complicated for some people. Like they don't understand what it's really talking about. So I don't know how to deal with it. But I would like to make a platform someday, but we've got to get some money coming in first before. Like the bigger thing is that like I would like at some point to like hire people. Like if I could get maybe 3 other guys to help develop a platform, and I could pay them all in the hundreds of thousands a year, I'd do it. So but to get to that point, we'd have to make the YouTube channel like amazing, right? And there you go. See, I could have made 4 more ticks. I was thinking like maybe I should have gone for the regular session high instead of the open, but it's okay. Still, can you believe that 225? The thing that frustrates me about it is I was like, oh well, I could put it on Futures.io, my strategy on Futures.io, but I can't get it into a zip file. It errors out every time. It says that it can't access the enum, even though it's there. It's like it's in the general namespace, so I don't know why it doesn't see the enum. But a broker startup set the techie, yeah. Well, I think that's what it would have to turn into. I mean, and here's the other thing about that, though. This is the thing that frustrates me is that so there are some things that I want to build into a platform of sorts that I don't see anywhere else, and I don't anticipate that I would see anywhere else for a long time. So, like, particularly some of the deep architectural things and what I want to see for backtesting. Like Jigsaw is probably never going to build backtesting. I don't think that they're ever going to do it. Okay. So I have no reservation with building a system to do that because I know that Jigsaw is never going to do it. Because I don't want to waste my time just duplicating Jigsaw's function. I think a lot of the time when people think about a platform, and then the first thing they want to do is build a DOM. And I'm like, why? Why wouldn't you just use Jigsaw? Right. But there are some things in Jigsaw that are missing that I really want them to make. And that's like, I don't know when they're going to get around to it. I haven't heard from, well, they're doing a webinar next week, but they did a survey and I haven't heard anything yet about like where they want to take things next. But like just as an example, a quote board, like they don't have a quote board in Jigsaw. That's a pretty basic feature, right? And there's a lot of cool things that they could do with a quote board. I wish I could just make it for them. Like maybe I would make that for they. You pay me, I'll make you a quote board. Basic quote board, you know, it's those sorts of things, or like the ability to chart spreads. Like you need that. How come so many platforms don't have that built in? It's just crazy to me. Like in futures, they're gonna need it after these micro futures. Let me tell you what, the micro futures are going to make interest rates a lot more popular than they are, and I think it's going to be in part because there's going to be a lot of people trading the yield curve, the spread. So you're going to need those features. You're going to need those features. I guess I could just take out a $300,000 loan and hire 2 programmers and a marketing guy. The 2 and 10 will invert again. It's just a matter of when. The way that the spreads worked out today is kind of funny, but they did all revert back to where they were. But there was a point at which the knob spread had steepened and the 2 and 10 had steepened. I can do your marketing for you, Water. Have you ever heard of it? Yeah, that was all. Do you even know what language you want it built using? You should look into the options out there in their GUI packages. Yeah. So here's some of the here. I'll share because I don't want to give away all of the like because maybe someday it matters and I don't want somebody to steal all of my ideas. But I'll tell you one thing about what I would like to see in a platform is I really think that you want to have a language that is fast like C++, but if C++ is really complicated for some of the kind of like asymmetric data structures of sorts. So there's a lot of in a platform you're going to get a lot of an event happens and then it needs to trigger this other thing, and how do you have something always looking for that and trigger off as soon as you can. And in C# that sort of stuff is really easy because you can just add listeners and stuff like that, right? When you get into C++, they have to, you know, in order to make it manageable, they just kind of make like a loop, like this thing where it runs through this loop of stuff every X milliseconds or whatever, right? Well, I think that what you can do is you can use a language like Rust to handle all of the concurrency issues so that you get something that's more responsive. So you get more responsive. You don't have to deal with the memory issues. Memory is a problem in C#. You get a stable platform, you know. So, and then on the other side of it is that you've got to be able to plug it into other things. So, for instance, in NinjaTrader, you can program in C#. That's great, but when you get into like algorithmic trading, it's not fast enough. So I might want to be able to do it in a low-level language like Rust. Let's just say you can trade it in Rust. But then all of the really great machine learning frameworks and so forth, those are all built in Python and R. So I want something that's built in Rust, but that I can write the strategies in Python or R. And then it will have a backtester like NinjaTrader's, right? So those are kind of the bigger things. But when you think about all of that, if you're a technical person, you should be realizing that's a heavy lift. So I would need to hire employees. I would need to hire a Rust expert. And the platform would probably be expensive. So before I came along, water was all hard and cold. No one wanted it in their cans and homes. I had them warm it up and made it popular. Now every car and home has it. Okay, Ace. You put together for me a marketing proposal for our indicator package, and if it's good, we can work some stuff out. Because if you really provided value on the marketing end, I'd be willing to give, like a commission on a sell or something like that. We can do this for you. We just need to warm it. Warming water up is what made it popular, huh? Call it heart charts. Oh my gosh. We literally could call it that. That's funny AF. Nah, I shouldn't have gotten out when I did it 20. Kept going. I had it so right this time, didn't I, guys? Now it's time to roll over. Yep, it's telling me that. Oh, by the way, we need to look at the liquidity now in the new contract, right? September. Oh, it's terrible. Just, yeah. 87 to 100. Well, it could be better, but shouldn't say it's absolutely dismal. It's still half. It's still half of this. So we may just finish this out on this one. Great summer pricing at $49.99 now with Quantum View. Oh yes, that's what we need is Quantum View. That's what they should have called the Vista charts, is Quantum View. Jeez, man. VWAP cheap bar with order flow trigger alert. Yeah. Anyways, you know what? Another thing that I would like to do though is I want to see. I would a more retail trader focused financial news website. It's just like I've been in the game way too long. This is the way it goes, though, right? It's just so silly. But there's a lot of really good analysis by like the Wall Street guys, but Wall Street banks. But we can't really get that stuff, and I just really wish that sometimes that there was more information out there that was more focused on retail trading, and strategies and so forth, and There's just not a lot out there. So I don't know. Maybe it's just because I'm bored sometimes. I want something more to read, you know? But, you know, it would be nice to be able to pay for a research team too. Like, I think about if I was making $1 million a year from my YouTube channel, what would I put it into to try and make even more? Well, that's one thing is we could build our own platform. I don't know if I would make a ton of doing that, but it would be a good investment. But another investment that I could put money into is I could pay writers and I could pay researchers. Like if I could get people that, you know, normally they would go and be an analyst at the bank, but they can come and they can be an analyst for me and write stuff for us to share with you on a regular basis. That would be great, right? Then we could make more videos and that would make the channel even better, right? Full auto algo will sell well? No. I would never pay money for an algo. My opinion is that if somebody is selling an algo, that it's probably a scam. So if I had an algo that was so great, then I would open a fund with it. I would determine what the optimal number of contracts to trade is. I would open up a fund where people could put money, and there would be a limit. And you'd get your funds back in the terms of in the form of dividends or whatever the deal is. But I wouldn't give you the algo because people would just eliminate the inefficiency, you know. Ace says, but we need to separate the stock boys from the futures boys. I have no desire to hear about Boeing or Tesla. I wouldn't pay to hear all the events that affect them, but not me. Etherator says the Renaissance model. Exactly the Renaissance model. So when you understand, I mean, the thing that's interesting is that a lot of these kinds of edges or things that we know about the markets kind of came out in like the 80s, around the time that like Renaissance and some of these other guys were starting to get in there. But one of the things that we've learned is that not only does every order have an impact on the market, but that you can calculate the optimum number of contracts to trade for a given market inefficiency. So that's why Renaissance uses the model that it does, and I would do the same thing if I had a robot that was so great. Like if Jay really turns out to be so effective, but like for instance, Jay is a great example here. Probably the number of contracts that Jay can trade is not that many, maybe a few dozen. Yeah, so in terms of separating the stock boys from the futures boys, that one is a little difficult, Ace. So I think that at some point on this channel, I am going to have to get into things that are beyond just what are futures. But the way that I want to do it is like the way that I think it should be presented is the futures traders are experts on macroeconomics and trade execution. And so that's why you should listen to the futures trader. So I would be creating content that is targeted towards regular stock traders and regular people, but is still focused on macro. It all kind of affects each other, but you know what I mean? The other streams I listen to often mix them. Yeah, it's I'm not going to become the let's just pump GameStop sort of a thing. I don't think that that's a good long-term game. That's not kind of the audience that but when you look at if we're just we're just going after the keyword futures, there's only a few 10,000 people or so at any given time that are searching for that sort of thing. So it really limits your audience, right? And if you consider that like the audience for it is maybe like 10 to 20,000 people at any given time, and we have 6,000 subscribers, like that's a pretty big section of the market, right? So my focus right now is very much towards getting the really key basics out of the way, so that we can start focusing on some more general things that will attract more people to the channel. There is a niche just for futures. Yeah, there is. I'm just saying, like, we've already kind of filled it on the YouTube side. Does that make sense? Like, I could be wrong, but there's probably a hard limit for, you know, at around 10,000 in terms of like continuing to grow the channel, right? You need segments. Yeah. So kind of where I would like to go towards is kind of more of this, like, okay, like the CPI was a good example. I did this on TikTok. Probably we should have done more of a formal video, but like we could go in and we could say, here's the last report. Here are the different elements here. Here are things that happened this month that might affect those particular numbers. And here's why the analysts are estimating that it's going to be spot 5, spot 6, right? Now we got to be very careful to focus primarily on empirical facts, things that you can look up, right? But then, you know what, we can kind of get, because we had really good edge here today on this, and this is an edge that we could share, and it wouldn't have removed, right? We knew that that it was likely to come in hot, but only slightly a little bit, and that whether or not the hot inflation was due to vehicle sales would be a really critical point. And so when it came in and that it was still really high, it was 7%, right? We knew that we could fade that move. And so we faded that move and we got an amazing trade out of it, right? So if we're putting that kind of content out regularly, that's going to bring a lot of people in, right? Because that's going to be relevant to the futures traders and the retail traders. And CPI is something that everybody was interested in, right? I'm sure the folks in this room would have suggestions of things that would bring more people in if that was your desire. Yeah. I also think that we can do more entertaining content. You know, stock market Steve is kind of one thing, but I think that we need to be able to poke fun at the trading too. That can bring more people in. So, I don't know. The funny thing is I say all of those things about, like, here are some things that I would like to do with the channel, and those are like really far off, and like what is kind of like the near term future. I think I have the near term future. Political talk. I mean, I would like to be able to talk. I mean, really think about anything that they talk about on CNBC would be like fair game for us, right? Beyond just I don't want to do pumping individual stocks. Although I wouldn't be opposed to, you know, doing fundamental analysis of individual stocks. But I digress. But you know, in the short term, we've got our fourth video. We've got the day trading nirvana. We've got the biggest lie in day trading to take care of. And there's a couple. So I've got a good 5 or 6. I think I've got a good year's worth of content work cut out for me. So I think that some of that is really far off. But in the meantime, the focus is probably going to be much more on developing our edge on trading the yield curve. Yeah. That's the real focus now, because that's a place where I think that we can do really well. You know, I personally find stock market Steve repellent. Well, that's kind of the whole point, right? If people, I would love, nothing would make me happier than for people to hate watch Steve. Right? That's the whole point. You know what is funny too is that I've been knocking it out of the park with Steve. Like, in terms of, like, it hasn't been very popular on TikTok. I mean, every once in a while one of the videos will do okay, but it really hasn't taken off the way that I really hoped it could have. But the way that I've hit it out of the park is that my intention is that whatever it is that Steve comes out and says, you should do the exact opposite of it. And I've been doing really well with that. Like, he was able to pick and pump AMC almost exactly at the top, you know, as all of these sorts of things. He always picks it. He always gets it on the day that it's like the most popular. And then after that, you know, so you could use him as a contrarian indicator. So lately it's been doing really well. Now, on Tommy's suggestion about a political talk show, I think that we need to talk about politics, of course, and that particularly as it pertains to trading, because what happens in the government is just an inescapable effect on markets. But I tried making a channel that was kind of more political content focused, and I didn't really run with it. And the thing that I found was that political content just doesn't really pay very well. And I just didn't think that it was worth it. You basically get a lot of competition. It's not as sophisticated of an audience as you think. You have to basically play to your audience, and then you know, the ads and so forth targeted to those demographics aren't actually worth that much. So certainly not compared to the financial space. So I would much rather stick with the financial space. I got to check out the Steve updates. I thought it was pretty funny. I haven't been posting a ton. I've only been posting like one a week. I don't know. I kind of started running out of ideas. But the thing is I don't think that everybody gets it, to be honest with you. I think that a lot of people watch it and they don't see that it's a parody. Or, you know, they go, oh, it's a parody, but they don't understand why that's a parody. You know, they're like, oh, he's just like talking like every other stock guru. You know what I mean? Like, if you're not a serious trader, you might not understand what's so parody about it. McConnell, we haven't given up hope that we can reach a deal on infrastructure. Okay. I didn't catch that the mini kind of peaked there. I don't know. It's just kind of weird to think about, because I would like to spend so much more time creating content for the channel. And to do that, we'd really have to do it full time. And it's like, what do I got to do to get us to full time? Well, the channel would have to be would have to get 20 times the views that it does today, basically. Well, I mean, if something goes viral, I suppose that could happen, but based on our growth and everything else like that, it just seems like it's so far away, yeah? Oh, we'll see. We'll see. Make sure you click the like button for this video because this is just this was just an amazing trade. You better talk about how you made $1,000 today in your video. Yeah, I just YouTube live streams don't really compare to Twitch. Well, so if you're not doing video gaming, I think that there's a lot of things about YouTube streaming that are very attractive. But you are correct. You do not make as much money from YouTube live streams as you do from Twitch live streams. If I had kept my channel to only one-off videos on YouTube and then only Twitch, live streaming on Twitch, I would probably make more money from the live streaming. I don't know if it would be overall better or not, but I think that it's probably negligible. So the thing is that we never got any discovery on Twitch, and we got so much discovery on YouTube. And if I wasn't streaming on YouTube, how many people would actually convert over into watching the live stream? Not many, I don't think so. You know, so it's kind of a wash in that respect. Yeah. No, so Mike, the whole thing about talking about how you made $1,000, I have real moral. I think that you've been around when I've talked about that before, right? Like I have real moral qualms with how people do that. Like I get what they're doing. I understand why they do it. I don't think that what they're doing is illegal necessarily. But I think that it's harmful. I do. I think that you're trying to draw people in with the promises of riches, and that you're attracting an audience that is unlikely to be successful as a result. Yeah, and so I don't want to advertise the channel based on how much money I made. In fact, if I'm taking these trades and I'm making like thousands of dollars from doing it, my goal is that none of you know, because I also don't want people to come in and try sniping my strategy. So you know, it's like that. And the thing is that when I go out and I look at other traders that do this, what happens is that the entire premise of their channel is based on their performance. And so when their performance declines, their audience completely disappears. Whereas with us, because we are, you know, about completely different, and I try to make it so that I'm valuable to watch regardless of whether I'm doing well or not at the time. And so the audience is incredibly consistent. Part of why trading channels can only get so big. Yeah. But no, what is this freaking name? Graham, that's right. I think that the the template channel, like the channel to look at, is Graham Stephan, and not like these other traders. You get what I'm saying? Like the objective is, let's get the really good trading stuff out of the way, stuff that I think I've taught you guys on stream, but that I want to make videos and really get good videos out of it. And then we'll pivot to more Graham kind of videos, because I think that there's a lot of insight that we can lend to people. Graham annoys you? Really? That's interesting. Why does he annoy you? I kind of like the thing to me is, it seems to me like he does it incredibly well because he appeals to a real wide range of people, you know, because he just seems like an everyday guy. He doesn't act like he thinks he's so smart or anything like that. No. So the thing that you think, the thing that bothers you about him is that the reason he made so much money in real estate was basically because he was lucky, and that he's doesn't really particularly smart, I guess. Well, so here's the thing about him that I like, and part of where I say that I think he's kind of more of a template of where I want to take the channel is when you look at his videos, like how does he put them together? Compare how he does videos compared to like almost everybody else in the financial space, especially TikTok. Because like you get these people on TikTok that the mistake that they made today. Guys, inflation, it's coming. You need to be afraid. It's going to be so crazy. This next CPI report is going to be absolutely insane, and the market is just going to completely collapse. And I'm going short, and you should all go short too. And yada yada. You know, this is what people do. And what does Graham do? He goes and he says, okay, here are like all of these studies and pieces of information about it, and what experts say. He does the research and tells you what the experts say and relates it in a way in which the average person can really understand it. And he gives it a clickbaity title, but he doesn't share BS hype information. He actually does like real analysis, right? So that's what I like about his channel. Oh yeah, I had that open because I was looking for, yeah, okay. I was going to change the name here. I'm just going to put I fade CPI for huge winner. I see, like, I think it's okay to say, like, I had a huge winner. I don't think that it's okay to say, you made so much money, blah, blah, blah. In fact, I think that if I started making videos where I started saying monetary amounts, that there would be legal problems. Even, you know, well, one thing is I don't always trade it live, so that's one thing. I didn't trade it live today, but the bigger issue is that, like, if you make performance claims because I'm attached to Ninja Trader Brokerage, you have to like start providing like stats on a regular basis and stuff. Like there's just a lot of issues with it. So it's okay to like say like, here's a really great trade that you should look at. I think that's okay. But what I don't think is okay is to try and give people the impression that they should watch me because you're all going to become rich from doing it. because I don't think that that's honest. Even if I'm doing really well at that time, this doesn't necessarily mean that anybody will be able to duplicate my success. In fact, my intention is that people can't duplicate my success. I try to have an edge, an informational edge on the market, right? Being clickbaity comes with being a YouTuber. It does. I saw this TikToker the other day, and he was complaining about how, because he likes to watch Conan O'Brien, and so he was getting recommendations from other channels where they would steal Conan O'Brien clips. And he was complaining about how YouTube algorithm still promotes them to you because it makes money off of them. And it's so true. Like, the algorithm will promote shady content because it's effective and it gets a lot of views and engagement and ads off of it. And like, at what point do you sit down and you say, you know, if our algorithm has a tendency to promote content that is negative for our users, maybe we should rethink our whole approach to the algorithm. Maybe maximizing for money is not the way to do it. Maybe we need to minimize harm first, right? And I guess that's where my approach is like, you know, if you want to have any chance of success in futures, you've got to minimize your risk first. Yield curve for you, micro yield futures are going to go a long way towards helping that, right? You know, like these big moves, we have a big move in the 10-year treasury, 8 ticks. Make $128. In micro futures, we'll make $16. Right? Like, the amount of risk that we're taking on that is so trivial. I could go and I could take the wad of cash that I have saved up to trade, and I could go and trade one contract, and lose every day for years. Yeah. But I also think that we'll be able to find some real edge in it too, so. People got to be successful trading, say, a $10 to $15 spread and not get trigger happy or impatient. Those sound interesting as it see me. Hopefully it takes off. Well, yeah, I mean, they will definitely have activity, but I don't think that they're going to be super successful. Like, in terms of volume, I don't think that they're going to trade at nearly as much volume as the MES does. I mean, just the reality of the situation is that there's just not a lot of people that are interested in interest rates. That's just the way that it is. Even though interest rates are actually really interesting, it's just that you have to understand a lot of things to understand interest rates, and there's a lot of math and stuff involved. So, but that's why it excites me, because now I can try and implement some of these more sophisticated interest rate strategies that typically you would want to be doing with, like, spreading between the bonds and the futures or the basis and things like that. Well, now, or the yield curve, now we'll be able to do those and risk hardly anything. So, and it will be in a place where not a lot of people are interested too. So it's like, it's something hard to do, but that I think I can do well, and there won't be very much competition for it. Like, it just seems to me like it's the perfect fertile ground to farm some edge. I'm super excited about it. I'm so pumped. Oh, Jay actually finally decided to take a trade, huh? Yeah. Oh, it was a good one. Okay. I don't know if that one's going to make money. Goldman Sachs is requiring its U.S. bankers to disclose whether or not they have been vaccinated against COVID-19 ahead of a planned return to the office. I've been hearing a lot of people say, have you guys been hearing this as well? That some people, like their company, returned to office and so they just quit. Like some people really, really like working from home. I really, really like not driving. Honestly, if it could be like I walk across the street and then I'm at work, that would be awesome. I would totally do that. Because I think there are some things that we are missing when we're not all in person. Like there's like these offhand conversations or even just hearing what's going on in another team that we don't see, and so there's not as much information exchange, and that's a little bit of a problem when we're talking about like technology infrastructure and keeping websites going and everything. So I feel like that everybody being remote, that there is a cost to it, but the efficiency increases that you get from not having to drive into work 30 minutes and all of these other things are so worth it, right? Mike says he's hearing that happen as well. Another one. So here's another one that I heard about. This was really, really interesting. So this lady, I should look at the camera. Look at you. Okay, so this lady, she was out of work. She had taken leave or whatever. And so then she was looking to get rehired back at her old job now. And so they had her job posted and she applied for the job and it told her that she was not qualified for the job. So this was a job that she had worked at for like 5 years or whatever before. And it was telling her that she wasn't qualified. And apparently, well, what the deal is that like, if you got a PPP loan, you can get forgiveness for the loan, but you have to do certain things. Like one of the things is that you can only fire like 25% of your workforce. But there's like a little loophole where like you can fire more than 25% of your workforce, or maintain more than, you have to maintain 75%, but you can lose more than that as long as you're making a good faith effort to fill all of those positions and that you're actively hiring. And so what they're doing is they're putting these jobs out and saying that they're actively hiring, but putting the job qualifications so high that they'll never find a qualified applicant so that the position never actually gets filled. And that way they still get the PPP forgiveness without having to hire anybody. Makes sense? That's, now it's hard to prove that that's what they were actually doing, but like the whole setup was completely made sense. And I think in that situation, probably that was what was happening. That is also what they do to get H-1Bs. Oh, yeah, the H-1B thing is terrible. I tell you what, this is something that I see that I think is so funny. Man, by the way, I missed out on a good 10 ticks there. I took that off at the open. I didn't have any kind of order flow signal when I took it off. I probably should have held it to 24. Okay, mistakes were made. It's okay. I still made money. So these tech guys, okay, because you got to remember, I mean, there's lots of people all over the country that do computer programming or something in tech, right? But the most prestigious tech positions are all at like Apple and Google and stuff, right? Goldman Sachs is considered on par with that, but yeah, they don't get talked about a lot. Everybody's always thinking about Google and Apple and Amazon, right? Well, y'all don't understand how much the corporate world hates paying these developers as much as they do. Okay, so like it's actually a little crazy. The other day they were like, what was it? Starbucks was saying that they're going to increase their minimum wage to $15 an hour, and that they're going to make it so that you can make a six-figure salary at Starbucks. Okay, so like at least here in Utah, like a junior developer could start at 70, 80,000, right? Because the range is basically between 80,000 and 120,000. Above 120,000, you're either doing something really specialized or like management or something. You're going to pay Starbucks employees as much as computer programmers? But that's the thing, is that the software development is very, very expensive, and they do not want to pay for that. So they're doing everything they can to bring that cost down, and that means getting more people to do it, right? So now it's like, oh, you don't need a computer science degree. You can just go to like a 2-week code camp and you're qualified, right? And then they bring in people through the H-1B visas is another one. So you got all of these tech guys that live in Cupertino, work for Amazon and Google and whatever, and they totally support these policies, and they are destroying. They're making their labor worth less. Like straight up, what they're doing, it makes their labor worth less. And like, I don't hear anybody saying anything about this. 10, 20 years from now, all the leftists will be upset about it, and they'll be mad about how they ruined the computer industry and you can't make money from it anymore. But right now, nobody's talking about it. You know why nobody's talking about it? Because they own all of the social media, and they don't want people to push against that. Heck no. That's pretty, okay. Pretty good short there. There are no cheat codes to programming. Well, here's the issue with programming is that there's really two parts to programming, probably even more parts than that. But everybody just thinks, oh, you're a developer, you write code. It's almost always so much more complicated than that, right? Like you always have to engineer something, and you have to test it, and you have to take it through the development life cycle. And those are things that not everybody is good at, for starters. And it's something that experience definitely helps with. I definitely do better work now than I did when I started in 2010. So, the idea that you can just have people that train for 2 weeks and then they're the same as the people that went and did a 4-year degree in computer science, it's patently ridiculous. But there are a lot of tasks that I do on a regular basis that I could probably teach my wife how to do. They aren't complicated. It's just like configuring things, like reading the documentation and configuring things. There's a lot of that. So on the other hand, there is maybe a little bit of a justification that you don't have to have people as trained up as much as you can. It's just kind of like, how do you separate those roles and everything? Because I don't think that you can. I don't think that you could go and give my job to somebody that has only gone to a code camp for 2 weeks, and they would be able to do everything that I would do. So then you would have to separate it out. But how do you separate it out? Because it's just not something that I think you can split between two people. You know, it's that whole old adage, you can't add, to double the number of people on a project and expect it to go twice as fast because you just increase the amount of organizational overhead. It's the same problem. Woohoo! Well, Jay has done it once again, folks. This is so he's only been taking one a day. But this is the 4th day in a row now that he's won on that trade. Maybe it really is important that I go over to Ninja Trader so that we can trade Jay. I'm actually really impressed. Like when I look at it, it doesn't seem like huge. But then it was like the right signal, and the way that it played out was exactly the way that it's supposed to. Like, I should be less skeptical about it next time, huh? Because it was a really good trade. Live Squawk retweeted an Arabic speaking Twitter account, and I have no clue what it's saying, and they didn't try to translate it or anything. What style does Jay trade? I don't know. I don't really want to reveal too much about it. He's reading order flow. I can tell you that. Let's say he is looking for indications of informed trading in the order flow. So for him to have seen that and taken it, and then a little bit later a little bit of a collapse come in the way that it did, it's exactly the way that it's supposed to work out. So M. LeBron says long bond auction days are a license to steal money. Today had so many other moving parts added to it, just reinforced the blame. He is right. There tends to be movement in the treasuries when the 30-year is being auctioned off. Which direction it will be, I don't know. I've never been able to catch really great trades on those days per se. That's awesome. It's looking promising. Well, so the issue is that I had been trading it for a while and made a couple of changes to it, and these changes seem to be doing better, but I haven't really tested it for long, so I'm only going to count these last 4 days. So these 4 days, it's taken 4 trades at a really good sample size now. Normally I would want to run the algorithm for like 2 weeks. Well, 2 weeks is probably not enough. So I think that we could continue to trade him through this summer, and then when the fall comes, maybe we do it. But another issue is that maybe he's doing so well because it is the summer, So I don't know. I think there's also a lot of room but I really think that if I get into Markovian models, I just, sometimes I waste time, huh? But you gotta waste time. You can't just spend the whole day back testing things. but I need to get into setting up a Markov model of some sort. I think could improve the hit rate of it even further. A former GOP rep calls on party to move on from patron saint of sore losers. He really is. He's never been a gracious winner or loser, has he? No, sir. No, sir. By the way, what do you think about my title? Fading CPI for huge winner? I think that's a great title, yeah? Maybe it's not a great title, but I'm feeling it. You know what? You know what I keep forgetting is that Zero Hedge has me blocked, and I have to go and like visit their website to see what stuff. Markets have bought the Fed's transitory narrative hook, line, and sinker, as they should, because what we've got right now is like all in line. I really, before I start being really concerned about inflation, I need a data point that really suggests that something is going to happen, because right now, so they get this great argument that like, well, you say it's transitory. How do you know that? Well, I don't think that the chip shortage is going to last forever. It's going to be for the next year or so, but not forever. Yeah, he blocked me because I made a good argument against Bitcoin. And they decided that I'm a troll and that I need to be blocked or something. There was a comment thread on one of the Bitcoin things about, I'll tell you specifically what it was. Is that there was criticism of Bitcoin concerning how much energy usage it has. And I tweeted that it doesn't really matter how much of it comes from renewable resources, because it's a huge energy cost that's not necessary. And it's true. We could move over to Ethereum and we would use less energy. Like there's tons of cryptocurrencies that already exist out there that like do this better. In order for Bitcoin to really ever become a thing, and I frankly, I think it's too late. I think it's impossible at this point. But yeah, it would have to be more efficient than the regular financial system, and it's not. It's far less efficient. And people will say, well, it uses as much energy as the financial system. Yeah, but it's processing like 1,000 times less transactions. What do you think is going to happen if Bitcoin really was like the world currency? Then everybody would be scrambling to mine as much of this as they could. It would be absolutely terrible. And the more miners that are out there, the more the difficulty goes up. So the amount of energy that this thing uses just increases. It just increases, right? So anyways, that was the argument that I made, and there was like a big comment thread about it. Like there was so many likes and dislikes, and it was like impossible to read my Twitter feed for a while because of that stupid thing. And then on the end of it, the next day, Zero Hedge blocked me, so I can't see their tweets anymore. So I have to go to like their main website to be able to see what headlines they're posting today. See, their headline is core consumer prices surge at fastest rate since 1992. I'm listening to our Laffler get slammed on. Okay. I'm not familiar with who that is, actually. Biden launches plan to close Gitmo quietly after Obama tried and failed. Good luck with that one. Yeah, Zero Hedge seems very upset and against the suggestion that the inflation is just transitory. But I think it's the stronger argument right now. It does concern me that the Federal Reserve doesn't take that possibility more seriously. But at the same time, what do you want them to do? Like, they say, yeah, well, if it isn't transitory, then we raise rates, right? Okay. Is this the Laffer curve guy? Okay. Need to drink some water here. My mouth is getting dry. Okay, well, the E-mini had a pretty good jump on the open, and that whole move has just faded back out. So I think that the reversal of the news move was good and insensible. This extension up, I'm not sure does. That just looks like bullishness trend following sort of stuff. So I'm not surprised that it come back, but it sure does look a little aggressive, don't you think? There sure is. I don't think I've ever seen something where it's like they're talking about an actual economic thing with like formulas and math and everything behind it that is more politicized than the Laffer curve, even though there is definitely some truth to it. Now I hope that we put out the trash. Oh, probably we did. My mom was around yesterday. She would have definitely remembered to do that. Seth, if you don't mind, where did you gain your understanding of the liquidity vacuum related to news? Was it from that market microstructure book or useful mental model and my mini? So kind of yes. So what I realized, because I'm going to bet that is not the first time you have seen that phrase, right? I definitely can recall times where Peter Davies from Jigsaw Trading talked about the vacuum, for instance. But what I find happens very often is that there will be some sort of an innovation in academia. They learn a particular thing, right? And so then, some entrepreneuring retail trader will pick that up and share that information with other people, right? But the problem is then it becomes like a game of telephone. And so the original understanding of how that dynamic works in the order book kind of gets lost in translation over time. And so that's where I think that you can actually still find like a really good edge in it. But you just have to realize that what happens is that the order book almost becomes exhausted. That like there is certain locations at which the latent liquidity is just not there. And I mean, you will always see it you will almost always see it in the 10-year where there's a price that will just have a lot less liquidity sitting at it than the other prices. And it'll just get stuck there and it doesn't go anywhere, right? And then you'll get this issue where there's more resting liquidity below it and resting liquidity above it. And so even though nobody wants to trade that spot, they get stuck anyways, right? So when you start to apply that to news, then all of a sudden you can start to find things. Although I will suggest that it's often more complicated than that, right? Trying to just trade those little vacuums in and of themselves is a little iffy. But where it becomes really useful is like when you see them fall into a vacuum in a spot that's very clearly not where the value should be. You know, like in this case, the equity markets recovered and we knew that the news wasn't very good. So just based off of our own understanding of the fundamentals, we knew that probably we should be back up at where it was before the news. So why wasn't it there? Well, because there was the liquidity vacuum and because people were kind of sitting on their hands during the ECB press conference. And so that kind of combination of factors provided us a location where we could basically arbitrage an edge out of the market. Right? But it was from that book was like where I really understood it. And I'll warn you, like this kind of understanding is kind of like the crowning principle of the book, right? Like everything that you read up in it is like leading up to explaining that one thing. Like they're going through the history of all of the different models. And once you understand all of these other different models, then you can understand how that model works. And so what I'm giving to you is like extremely simplified. But that's the other key thing is that the reason I am comfortable talking about it on stream, I mean, I wouldn't talk about it on CNBC, but I'm comfortable talking about it on stream because it's not just something that people do. It's an inescapable consequence of using a limit order book. That like when you look at the math, like this thing, it's inescapable. Right. And so when you get into these certain situations where like markets are really moving, these show up and you can definitely pull an edge out of it, especially if you're informed about how the market is moving and why. It's still kind of the same risks though, right? Because that helped me get a really good entry. At least did in the ES because ES sprung back so much. The treasury was a little frustrating, but I had to have a correct reading of the news. And if I was wrong, if I had been wrong, if there was something in that CPI report that was like really, really bad and I had just missed it, then I would have gotten beaten up pretty bad, right? So that there was an actual real mispricing is a really critical factor in all this. So I will leave you with that. I will talk to you guys tomorrow. So remember, Friday we'll be here, and then I'm going to be gone Monday, Tuesday, Wednesday. I believe that John is going to run the stream those days. I need to talk to him about it again. I haven't seen him today, but we'll do all that, and then I'll be back later in the week. So until then, stay profitable, friends. Where'd my mouse? There it is.